Hi there. I always love to get a session directly after somebody who engages the audience so well, speaks about youth and growth and all those kind of things. And I'm sitting up here going to talk to you about finance. So what I want to try and do over the next 5 or 10 minutes is just to give you a sense of who we are, why were we set up, what do we do, are we any good at it, and does it apply to anybody in this room? So if I was to start and say, well, what are we actually set up to do? We'd like to be the Intel in the finance world. We'd like to be the chip inside lending. So what we were set up to do was to try and power growth in SMEs and to provide finance to SMEs that's both accessible but also is cheaper than what's actually out there at this minute in time. So we have two impacts to make. One is on finance and the other side is on competition. So in the finance world, what we've actually tried to do is we set up 2 years ago, we have funding of 800 million initially, which has now been increased to 1.2 billion. And that is actually wholesaled out into the Irish market. We get it at a discount because we're actually government guaranteed. We pass it on at a discount and we expect the end user to actually avail of the discount. And we check in each individual loan that's actually done by our suppliers to ensure that that discount is passed on. The second piece is that there was a complete lack of competition in Ireland in the actual financial markets. If you take it in 2008, if you wanted to lease a van for your business, you had 14 different choices. 2 years ago, you had 3. We now have actually got 8 suppliers, and I'll talk about those in a second, which is bringing competition back into the marketplace. And that's a really, really important place for us to actually help SMEs to have choice in the market at this stage. The smaller players, we give the money that we get in Europe out at the same price to every single supplier, regardless of size, which means that the smaller guys become much more competitive and we can deliver cheap funding to SMEs through a variety of sources. So in terms of the environment, if you look at what the SME has to deal with in Ireland, it's very clear that there's a challenge between SMEs that are small in scale, the rate that they pay versus what a large company in Ireland does. Large corporates in Ireland can borrow at the same rate as their European equivalents. SMEs cannot. SMEs in Ireland versus their European equivalents are paying somewhere between 2 and 3% of a premium. So the reality is, in trying to make SMEs competitive, we have got to try and bring down that price. The low level of competition I spoke about, the limited types of finance, effectively you are limited to term lending, leasing, hire purchase. We've tried to bring in more choice in the invoice financing area and also new supply chain finance, which we're going to bring in this year. The other thing as well is that the appetite amongst SMEs got badly burnt in 2008, 2009, so the appetite to borrow is much more depleted than it would have been 4 and 5 years ago. So one of the things we've got to try and do is to try and instill some confidence in SMEs that actually borrowing does have a role in the growth of their business, and sensible borrowing actually helps your business. And we need to try and be the advocates for that in Ireland. So in terms of the SBCI, what's our strategy? We effectively have 2 lines of business. One is pure lending, and that's where we actually put lending into the market through a number of suppliers. We are a wholesaler of money, and we actually then put that out through a number of retailers. And we will hope to increase the number of retailers that actually give out our money year on year. We have 8 at the moment. We would hope to get to 10, 12 over the next couple of years. So the idea behind that is they give it out at a discount, and that discount comes out as a saving to you as an SME. The second thing is risk sharing, and risk sharing is where we try to look at the access to finance issue. SMEs have difficulty in accessing finance in Ireland without having to tie up their entire family and all their assets in security and guarantees, and effectively tying themselves into a bank and a debt for a period of 15 or 20 years. When we say we're going to do risk sharing, we're actually going to take on some of that risk, and we're going to give an SME a break effectively, so that instead of being on the hook for 100% of a facility, it could be as low as 25 or 30% of that facility. And I'm going to give you 2 examples of where that's in play as we speak at this minute in time. So in terms of our on-lending partners, as you can see, we now have 8. So if you're looking for straightforward lending, it's the 3 banks. It's AIB, Bank of Ireland and Ulster. They all operate differently and they all operate different discounts. We give them a discount and each one of them has operated differently. Bank of Ireland passes on the exact discount that we give them. AIB have topped up the discount, and they now operate at a fixed rate of 4.5%, and Ulster Bank have done a 1% discount on whatever rate you agree with them. So I suppose the message from here is, if you have a proposal, it's worthy of bank support, shop it around, because the three banks operate very differently. If, on the other hand, you're looking for leasing, then obviously we have Finance Ireland, we have Marion Fleet looking at fleet finance, we have Bibby, we have Fexco, who have just signed up recently for a specialist equipment leasing facility. So if you are an SME in a manufacturing business and you're looking to buy a piece of equipment or lease it, Fexco is actually available to you. We've given them a fund of 70 million at this stage, and we expect them to use it over the next 12 to 18 months. So what I'm saying is that at this stage, variety is beginning to come back into the Irish SME market in terms of choice of lender, and we would ask people to actually actively go looking across the number of suppliers that we have in order to actually get the best deal. Then in terms of our on-lending to date, these are figures as of June. So are we any good at what we're doing? The figures at December, all right, say that more than 12,500 SMEs have actually taken our lending. A huge proportion of those don't even realise they've gotten SBCI funding because they've gotten it from their normal bank, or they've gotten it from Finance Ireland or one of our suppliers. But there are 12,500 SMEs in Ireland who have actually benefited from lower cost, more flexible funding in the last 18 months. And as well as that, I said we started with an initial fund of 800 million. We have actually got 550 million of that money out to SMEs over the last 18 months. So there is progress in this space, there is money available, and the key message today for me is to actually go and ask for it. So in terms then of risk sharing, today at 11 o'clock this morning, finally, we managed to launch our first risk sharing product. And while it is for the agri sector and may not apply to a lot of people here, it is important to give you the concept. The risk-sharing product is going to be 2.95%, which is a rate that's been unheard of in Ireland for the last probably 7 or 8 years. It is unsecured, effectively. It is loans up to 150,000, and it is actually being designed to help the farming community, who have actually suffered quite a lot over the last 12 to 18 months in terms of commodity prices dropping, milk prices dropping, cereal prices dropping. That has resulted in a large build-up of short-term debt, which is either on overdraft or by way of merchant credit. This allows them breathing space, because what it's doing is it's giving them a fixed rate of 2.95% for a period of up to 6 years, and there is an initial period whereby they can avail of an interest-free period. Now, that is an example of risk sharing in the Irish market. The next challenge for us is to start to roll products like this or similar to this into the SME market. But there is one already there, and it's one of the great secrets of the Department of Jobs, Enterprise and Innovation, and that's called the Credit Guarantee Scheme, which has been in existence for the last 4 years. The Credit Guarantee Scheme is there already. What it does is it is actually designed that in the event you go into a bank, they like the proposal, they tell you, yeah, we'd like to do it, but you don't have enough security. Because a lot of businesses at this stage don't have fixed assets that they can pledge to a bank by way of security. Their assets are their people, or they have leased equipment, or they have, so it's the actual intelligence in the business that's actually their asset. So what is actually happening is they are going in, it's a good proposal, there's good cash flow, it looks like it's profitable, but the bank can't take comfort because they don't have security. The Credit Guarantee Scheme acts in that space, and it already is there to provide a guarantee to the bank of 75% on facilities up to €1 million over a period of 7 years. It is operated by the three banks. One bank in particular has operated quite successfully over the last 2 years in particular, and it has allowed them to look at credits differently and actually expand their credit appetite. So if you have a good proposal, you believe it's worthy of support, it's been turned down on the basis that it has a lack of collateral, then you should actually go back and appeal for it to be done under the Credit Guarantee Scheme. So in essence, what we're saying is that effectively we are there to help SMEs, we're there to help them in terms of provision of funding, but also in terms of provision of risk sharing and new products. We're here today because we want to try and understand the manufacturing business and the manufacturing sector, and are there gaps in the manufacturing sector in terms of funding that we really actually want to be able to help, and can we build products that will address some of those issues. All right, so in the event that you actually liked presentation today. My name is John Madigan, so you can get me at john.madigan@sbci.gov.ie. If you didn't like it, you can write to Nick, okay, whose details are up there on the screen. All right, so thank you very much for your attention. I'm here to take questions, but we have a stand over there, and we were delighted to be one of the sponsors here at the event today. So thank you for your attention.